Make sure to get your free money from Moomoo, up to 6 stocks, each up to $3,500. I'm telling you guys, it is the best promo right now. Just use that link down below, deposit at least $100, and boom, you get your free money just like that. And with that being said, let's dive into the video. So check it out, guys. The markets, yet again, are all over the place, and they're leaning pretty heavily to the downside right now, pretty heavily to the red. The Russell 2000 is down about 0.5%. The NASDAQ 100 is at break even. We'll talk more about that in a second. And we have the S&P 500 down 0.9%, the Dow down 0.6%, as we have the VIX up almost 8%. And let's see how the metals are doing. Last I checked, they were not doing well. Yeah, gold is down 1.9%, and we have silver down over 2.2%. So we got a lot to break down. We'll talk about the overall markets. We'll talk a little bit about China and what's going on over there. And of course, we got to talk about some stocks, Twitter. We're going to go over what's going on with Twitter and some other ones. So make sure you guys stick on throughout, and let's get into it. So at this point in time, on the 5-day, 5-minute chart on SPY, number one thing, the first thing worth mentioning is it is still in a downtrend. We're still under, the lows from the previous trading day, which you guys can see on Friday. Our low was at about 424.50 to 425. We're still under that point, and we're still pretty much, we are peaking above the moving averages, but not really a full breakout yet. So we're still, fighting with those moving averages as well. And same thing pretty much with Triple Q. Let me show you guys this. I guess the only difference is this one is a little bit more above the moving averages on the 5-day chart, but still it is in a downtrend very clearly, and we're not yet above Friday's levels whatsoever. So that's number one, right? The 5-day, 5-minute downtrend is still intact. And if we pull back on the 4-hour chart, Triple Q, you guys can see we are getting a little bit of buying pressure at about 320 to 325. And going back to that intraday, you guys can see the low from the pre-market was at 321. So we are up about $5 off the lows, or in other words, 1.7% at this point in time at about 12:50 p.m. on the East Coast. And let's see what SPY is doing, as SPY is rallying a little bit above the pre-market lows, but not much at all. SPY is up. The pre-market low is at about 421. SPY is currently at almost 423. So it is up about 0.5%. And if you guys take a look, the intraday low on SPY was a lot lower than the pre-market low. We hit about 418. So at this point in time, going back to the 4-hour charts, we got to watch 415 to 420 on SPY. That's a big level of support. And on Triple Q, we got to watch about 315 to about 320. That's also a big level of support. So right now, the main reason, or one of the contributing factors to the markets going down here, is the Asian markets. The Asian markets did not do well at all. We had the mainland Chinese indexes leading losses as Asia Pacific markets fell sharply on Monday following a sell-off on Wall Street on Friday. As you guys know, last week was not good at all for the markets, and especially Friday. It was a freaking disaster. The Shenzhen component tumbled about 6%, while the Shanghai composite fell 5.1%. News of fresh COVID lockdowns in China added to worries for already nervous investors. You guys have seen those viral videos of all these people in the apartment buildings with the loudspeaker commentary. I don't know. That's what I'm seeing, at least. I'm sure you guys have seen that as well. It's looking pretty crazy out there. And we all know these Chinese stocks. If I pull up some charts, Alibaba's getting destroyed the past couple of months. JD, Baidu, Tencent. You guys know this. So the pain in the Asian markets are continuing with the uncertainty around CV19. You guys know what I mean, right? You guys know what I mean at this point, right? And, the uncertainty around how this is going to affect the economy. And, of course, the supply chain, we've been seeing problems recently already. So this is obviously going to make that worse. Beijing began testing millions of residents and shutting down business districts and some residential areas on Monday as they're seeing a rise in infections, right? And they have millions in Shanghai remaining under restrictions as the financial hub has struggled with rising infections, like I just said, and more lockdowns. This is quote unquote from a strategist at Saxo Bank. More lockdowns reduce demand for commodities in the short term, which is an easing factor for commodity inflation. But lockdowns, like I mentioned about a minute ago, also create bottlenecks in the world's factories, which causes more delays and potentially more inflation in consumer markets in the U.S. and Europe. So essentially, guys, we're going to be paying for this. We're going to be paying for this with more inflation because China, you guys know they produce a lot of stuff. And if they're not producing this stuff, or they're producing less of the stuff to give to us, well, that's going to be a problem, right? And we're already seeing signs of this. We have been for months at this point, and this is just making it worse. So we're seeing that, being the biggest catalyst today, I'd say, in the past week as well. I mean, this is not just today. This has been going on for about a week or two, a couple weeks at this point, maybe even more. So that is what's going on with China, and kind of how the markets are looking right now. I'd love to know your thoughts. Drop me a comment down below. And if you are finding value in this video, make sure to hit the like button. Make sure to subscribe. Just doing that really, really helps me out. And I do appreciate each and every one of you out there. And we're almost at 25,000 subscribers, guys. We're like 70, 80 away from when I'm filming this. So if you're not subscribed, let's get to 25,000. That's a big goal we got to hit. So if you could do that, I really appreciate you as always. So let's talk about now some stocks. Of course, Twitter is in the news yet again. Elon is in the news yet again. When the heck is he not? This guy's a marketing genius, right? Twitter today is up about 6% when I'm filming this, and it's been going up steadily all day. I mean, look at this. And just recently, oh, wow. Oh, what's going on? We just got a big pop in the past 5-10 minutes when I'm filming this video. Did we get some news? Crap. We might have just got some breaking news as I'm filming this video, and I don't know what it is. So, I mean, if you guys know why that pop happened, drop me a comment. But overall, this thing's up 6%. We're moving up all day, and this jump occurred on reports that the company is nearing a deal with good old Elon Musk, guys, that could be announced as soon as today, being Monday. And Musk, you guys know this, earlier in this month offered to buy Twitter for $54.20 a share, or about $43 billion, which $43 billion, guys, that's a lot of money, $43 billion. And Twitter's board met yesterday to discuss Musk's financing plan for his proposed bid, and the board negotiated with Musk into the early hours of Monday. I wonder how late they stayed up, guys. I wonder how late they stayed up. And that's according to the New York Times. So we have earnings coming up on Twitter, or Twitter is reporting earnings. You guys know what I mean. On the 28th, which is in a couple of days from now. Let me see here. That is on Thursday, guys. They're reporting on Thursday before the market. So, I don't know. I mean, at this point, Twitter's in a very interesting spot. Of course, we have Elon Musk trying to buy them. Is he being serious? Is this legitimate? Is this a charade? I don't know, to be honest. I have no freaking idea. But they're in negotiations, right? They didn't want him to own 15% more, but now they're willing to, or 15% more of the company, right? Now they're willing to sell it to him. And we all know the performance of Twitter over the past 10, 12 years since they've become public. It's awful. They barely, if you invested money in 2014, let's put it this way, you're down a lot because the stock has returned 0%. And of course, you have to factor in inflation, yada, yada, yada. You're down a lot. So Twitter hasn't done much. And they have earnings coming up. If earnings are awful and the stock's up a lot already, from 32 to 52, the stock's up 60% in the past month and a half, 2 months. If they report bad numbers, which they probably are expecting bad numbers, maybe that's why they want to get the deal done before earnings. And let's say they report bad numbers, the stock tanks. What if Elon's like, okay, maybe I'll buy it now for $44.20 a share, maybe a lot less, and then they lose out on billions of dollars at that point, right? So I don't know, what's going on behind the scenes. Obviously, none of us know, but I'm kind of trying to think out loud. Let's say, again, they have bad earnings. the stock will most likely go down at that point. I don't know. And let's say Elon Musk is not even really seriously looking to buy all of Twitter. Maybe it's just a pump and then he starts selling out, before the earnings. I mean, there's just so much crap. I have no freaking idea. Again, I'm just thinking out loud. And at this point, the trend is obviously bullish. And a lot of people say, don't fight the trend. And in this case, I mean, I wouldn't fight the trend necessarily. But let's say we come out or news comes out that Elon's not buying them anymore, or he even sells. Could you imagine if he sold out? Twitter's going to get devastated. And at that point, if it starts breaking 47, it's going to be a good short, in my personal opinion. But we're not there yet. They're still very, very, let's just put it this way. There's a lot more buying pressure, upwards pressure than there is downwards pressure right now. So we got to play it accordingly. The next stock I'm looking at is CrowdStrike, which we're noticing an inverse head and shoulders, left shoulder, head, right shoulder. We're clearly above the 180 moving average. We're not above the 50 SMA anymore, but we broke under that, and we saw a bit of an extended sell-off to the point where CrowdStrike got down about 17%. Not too bad because it was going up way too aggressively. Let's be honest. It needed a cool off. Now it's down 15, 16%, and it's up about 2.8% today. It's up on this overall red day that we're seeing. Pretty nice day at that, guys. Again, almost 3% in the green. So we're noticing, number one, the neckline's holding. Number two, the 180 SMA is holding. Now all we got to do is see some buying pressure to the point where we get a clear-cut breakout on this 10-day chart, because on the 10-day chart, we're still seeing a bit of selling pressure under 215, 220. I want CrowdStrike above 220. If it does break that, and quite honestly, 225, but 220 is a good first step. If it does break 220, we're going to get a push. I think towards 245 could be very possible. Mid-200s in general, that is where this right shoulder could start getting to the point of completing, in this inverse head and shoulder. So keep your eyes on CrowdStrike. And the last one, make sure to smash that like button if you're still with me, guys. It is UNH, UnitedHealth Group. This one's down about 0.9% on the day, as the Dow is down about 0.8%. The Dow is not doing well. And I think the Dow on Friday had one of the worst days in a long time. I forget exactly how long it was since it had that bad of a day, but believe me, guys, it was a very bad day, as you all probably remember, and UNH went down as well. So at this point, UNH is down to the 180 SMA pretty much on the 4-hour chart at about $505, $510. The uptrend is clearly continuing, right? You guys can see that. And to be honest, there could be more downside pressure. But if it starts coming down towards 500 flat, and mind you, now it's at 516, if it drops another 5, 10, 15 bucks, that is where I do believe we could get buyers stepping in, because you guys got to realize this is a quote-unquote value stock. I mean, I think at this point, it's clearly not as good of a price as it was a couple of months ago, but if we do get way more rate hikes, which at this point we're projected to, and we do get the movement from growth into value, this could get propped up continuously, even though it could be overvalued, because it's deemed as more of a safe stock, right? If that makes any sense. So keep your eyes on Twitter, CrowdStrike, UNH. Let me know your thoughts on everything from China, the markets, Twitter, Elon, whatever, guys. Let me know in the comments. Make sure to smash the like button and subscribe, and join my Patreon and get your free money for Moomoo. Again, up to 6 free stocks, each up to $3,500. All you got to do is use that link down below, deposit at least $100, and boom, you get up to 6 stocks, each of which up to $3,500. Use that link. I'll catch you guys in the next video. Thanks for watching. Peace out.